Hi everyone, welcome back to another episode of Stocks All Day with Dr. O'Day. Today I'm going to talk about some refinements that I've made to my investing strategy, as well as a few recent investments that I've made. So in this video, I want to talk about a few ways that I've refined my strategy over Christmas break now that I've had some opportunities to kind of sit down and really look at stocks a little bit more carefully. I've started getting into more support and resistance, so I'm going to continue a lot of the features of my strategy, but I am going to refine it a little bit. So for example, we've been talking about the MACD. So every time the MACD crosses over the signal line, so every time the blue line crosses over the yellow line, when it's below zero, that's going to signal a buy. And that was why I bought Campbell's Soup the other day. So on the 22nd, I purchased Campbell's Soup because of this MACD crossover. However, over this break, I've realized that there's a few more things that I think could improve the successes of my trading. So I was going off of either a 4% loss or a 6% gain, which were my targets. So I'd set my stop loss at a 4% loss. I'd set my profit 6% above it. But I've started to bring in some other indications here. So I've started to really get into support and resistance. And you can watch videos on how support and resistance kind of works. But really what you're looking for is you're looking for price points at which the price rebounds quite heavily. So right here, somewhere around 53.96, over time, you have a couple rebounds off of that. And it gets more important the closer these are to the current date and things like that. But you just see at some of these price points, you're seeing quite a bit of either support or rejection off of those. And so right here, price bounces up again at that same price, bounces up again at that same price, bounces up again at that same price, and it looks like we just had a bounce up at that price. And so what I should have been doing with this particular stock, rather than just looking at the MACD crossover and missing this kind of gain right here, is with my new strategy, I'm looking at these support lines. So I've added the support and resistance levels, and I've noticed that over time things are rebounding here. And so I'm going to start using this as kind of an early call. And so right here, we started to see that it was rebounding a little bit off of that line. This isn't a very strong rebound off that line, but I could have, kind of used this as a target. And if I was watching at that same time, the MACD had been going down, had been going down, had been going down. And as that rebound is happening, the MACD is actually leveling off. Which actually could have signaled a buy a little bit earlier. I could have gotten into this thing a little bit earlier and not just had this little benefit, but also had this benefit right here. And so I'm bringing in support and resistance, and what I'm looking for is once it gets to those support lines, is the MACD below zero, and is it starting to trend like it might be about to signal? And I'm going to try to preempt my purchases a little bit. So that's one way that I'm using support and resistance. The next way that I'm using these support and resistance lines is to actually set my stop loss and my profit. So if you recall, I've been going off of a 4% loss, so my stop loss is set 4% below what I bought it at, and my profit is set 6% above what I bought it at. I'm going to change that a little bit here. So the only line of resistance over time, next to this stop, at least where it is right now, the only line of resistance is at 46.58. So it wouldn't make sense to set my stop loss, say, here, because a lot of times when it rebounds right here. And so we want to give the stock room to fluctuate a little bit. So the way that I'm going to start choosing my stop losses, and this is going to inform whether I buy or I don't buy that particular trade, because I want a good ratio. I want at least a ratio of 1.5 reward to 1 risk. So 1.5 to 1 reward to risk ratio. And so I really shouldn't have bought this stock. So I bought this stock on 10/22. So we see that the open price was about $48, somewhere around here. That was where we were at. And so if you kind of think about this thing, I'm right in the middle of this resistance and this support line. And that's not where I want to be. This was actually, now that I look at this, it was a bad buy the other day. I went ahead and sold $1,000. I had put 2,000 bucks into this actually. So I went ahead and sold $1,000 at a profit of about 20 cents a share the other day. So now, and I'll talk about that trade here in just a second. But I realized that this was probably kind of a stupid trade because I'm right in the middle of these support and resistance lines. So it's almost a 1-to-1 ratio. It'll either go up for a 1 ratio or it'll go down to complete that 1-to-1 ratio. And I don't love that. I am actually though a little bit confident still, and that's why I've held on to $1,000 of Campbell's, just because this Ichimoku or Ikimoku is starting to signal. So, this is another indicator. I'm not going to use this all that much, but I do kind of watch the Ikimokus, and what it looks like is it might be about to signal, and that these things kind of all paired together tell me that actually Campbell's might be pushing above this resistance, pushing above this resistance, and maybe going up to here. I'm not sure, but I'm at least going to hold on to it because of that potential. So really what I'm looking for now, so the way that I would pick these stocks is let's go into, say, Gap. So Gap is one that I actually called this morning before the open of the stocks, and I looked at what it opened at, and I still liked it. So Gap, what we start to see is that we're seeing a MACD about to cross over. What we're seeing is that right at this kind of line of support here, it looks like we might be trending for a bounce back. It already rejected that line once. It looks like buyers might reject that line again, and then it might go up. And so what I would do is I would buy in at this level here, so somewhere around $20, $20.20. I would buy in right here. And now I need to pick my stop loss. So the line of support is right at, what is that, 1978, 1979 that I had drawn in. And so this level of support at 1978, 1979, I'm going to start there. But as you can see, things oftentimes go a little bit below that support line, or maybe a little bit above that support line. And so the way that I'm going to strategize and the way that I'm going to pick my stop loss is I'm going to start at this 1979 level, and then I'm going to use the ATR. So this takes into account the last 14 days of trade and kind of the fluctuations on average over those 14 days. And if we come to today, we see, and you're looking at this value over here, what we're seeing is that on today, that value was 87 cents. And so that means that the price fluctuates about 87 cents. And so I want to build that in as well. So I'm going to take this 1979 and I'm going to subtract this 87 cents from it. So 1979, 87 cents. So I'm just going to kind of pick a value somewhere around $19, 18.90, somewhere in there, and I'll set that as my stop loss. Now we also want to think about how we want to target. So again, previously I had set my target at somewhere around 6%. I had set it at 6%, and that was kind of just an arbitrary number. But as we can see, there's almost no resistance until this stock gets up to 27 bucks. And so instead, I'm going to set my price target or my profit target somewhere in that vicinity. I don't want to get too overconfident because, it does look like this was kind of a big jump there. But I'm going to set it somewhere around 25, 26, and then kind of see what's happening at those levels. And so what happens is, rather than having a 4 to 6 or a 1.5 to 1, I mean, if this went up 6%, so the current price was 20, real quick, let's do just a real quick math. So equals 20 times 1.06, that would be 2120. Let me make sure. Oh, I put a negative in there. But 2120 is where we would actually sell that thing. And that'd be somewhere around right here. Well, that thing looks like it has a lot of growth to go. So based on my existing strategy, I would have missed out on a lot of growth if I sold that thing around there. And so that is why I've refined my strategy a little bit. That's how I'm using the ATR in conjunction with the MACD, in conjunction with support and resistance, to kind of pick when I'm going to buy a stock, how much am I buying that stock for, what would my stop loss be, and what would my profit be. And if the reward to risk is not at least 1.5 to 1, I'm not going to buy. So back to a couple of purchases that I've made in the last few days. Some have been good. Some actually that's my morning stock predictions. So some of these purchases have been good. Some haven't been. So I already talked about how Campbell's Soup was probably a bad buy. I bought 20 shares at 48.34 a share. That was almost $1,000 there. Um, and what we see is that I sold it for 48.65, so I made a profit of about 31 cents a share. So it's a very small profit there. That was just to kind of loosen up those funds because, again, that wasn't the greatest buy in the world. I did keep $1,000 of that, so we'll see what happens to that in the next few days. I am pretty confident that it's going to go up. It's just not going to go up all that much. JD, so this was an e-commerce out of China. This was also not a great purchase. So let me show you this one. Again, this was before I really got into support and resistance, and unfortunately, I bought almost at a resistance line. So that was just not very smart. And that's the way that the cookie crumbles here. But I had bought based on a MACD crossover. Things were looking all right. Things were going up. But when I brought in those support and resistance, what I realized is I kind of bought right at a resistance line, and that kind of sucks. Now, JD is a stock that has gone up very quickly, so there isn't a lot of information in terms of support and resistance. I tried to plug out some lines to kind of see what's been happening. But yeah, that wasn't a great buy, but I'm trying to get as much of my money back as I can on this particular stock. To be honest, I should probably sell this, but I do in my head think that this is actually going to go up a little bit. I think that it probably will bust through this little tiny resistance here. I mean, we had a pretty heavy resistance here, but I think things will be okay, and I only have $400 in this particular stock, so I'm going to see what happens on this one again. I'm hoping that it jumps back up to at least this resistance line, and we'll see kind of what happens. The MACD did signal a crossover there, so that's what it initially caused me to buy it. Again, not the best buy. Now let's talk about a couple stocks that I think were great buys that I made yesterday. And actually, I still think that these are decent buys even today. Um, so what happened with Humana is that we saw a MACD crossover below zero, so that was the first signal. Technically, you're not supposed to use the Ikimoku in this way, but we are seeing that the blue line is crossing over the maroon line there. Typically, with this particular one, you're only supposed to buy when it's above the cloud and crossing over, and the cloud is this little thing that kind of goes right here. Technically, that's the way that you're supposed to use it, but you're almost never going to see a MACD crossover and an Ikimoku crossover above the cloud at the same time. Those two things kind of don't go together. They're two kind of independent trend signals, so swing signals there. So we did see there's some reason to suspect that this price might be going up from those, but also some reason to suspect this based on some support. So we see that over time, this was a fairly strong support line. So actually, it was resistance for a while, and then it turned into a line of support that has at least met some support over time right there. So this 380 is a pretty good number to base things off of. I actually bought in yesterday, somewhere around 408. And we can check on my thing here in just a little bit. I'm setting my stop loss at this 380 minus this level of 991, so about 370 is where I'd put my stop loss on this particular stock, and I'm targeting a profit up to about $460. So we see that that was a pretty good buy in Humana. Actually, that gave us, if we look at my morning stock predictions, that gave us a win-loss ratio of 1.38. It's not the best win-loss ratio in the world, and that was partially based on how that stock opened today. Um, so yeah, it wasn't the best win-loss ratio, but I still think that this is a pretty good buy. The one that I really like and I'm really into is Nicehorse. So one of the things is it looks like it's about to cross over the MACD. Now it is, and this is kind of a little bit of a red flag here, is that it is below the 200-day exponential moving average, suggesting that the price of this thing has been going down for quite a while. But what I really like about this is the strong support we're getting. So right here, right here, right here, right here, right here. And so the price is consistently rebounding off of that line of support and going up right after that every time with Nicehorse. And we're seeing also a MACD crossover below zero, and we're seeing very little price fluctuations here. And so what I did was I bought in yesterday. I went ahead and I bought 22 shares of Nicehorse here. Um, so 22 shares at 22.18. My total investment was almost 500. I set my stop loss at $20.70. So that's the 21.31 minus approximately 56 cents. So that's how I set my stop loss there at $20.70. My target sell price is going to be $25, which is right around this line of resistance here. And that's how I chose that. And what that has given me is a really nice margin on this particular trade. So Nicehorse, you can see here, that's a kind of win-loss ratio of 1.65. Now another one, I don't have any cash today, but one that I called today that I think has a really good opportunity for a great reward to risk ratio is Gap. So we had just talked about Gap. If we look at this, there is a lot. I mean, I would set my stop loss pretty tight on this one, but there's a lot of benefit up here. So if it were me, I would be buying in today on Gap. What I would do is I would set my stop loss at 1940. I'd set my target profit around $27, and that gives us a reward to risk ratio of $7. I might actually sell some JD stock to try to get into Gap today. But that's kind of where I've been. That's the things that I've been investing in the last few days, and I'm excited to see where this takes me. Um, Adding up everything from my kind of portfolio in E-Trade with my portfolio in Robinhood, I've gone from $1,000 up to $1,500 almost. So on the year, so since November 4th, I'm up approximately 50%. Well, that's all I have for today. Thanks for checking back in. Please let me know if you have any questions, and please make sure to hit that like and subscribe. As always, this is not investment advice. I am not a professional investor. What this is me telling you what I'm doing, the trades that I'm making, and I'm talking about my $1,000 journey. Have a great rest of your day.